Welcome to this week, and let me say, what a week it has been. Holy banana bread. It's certainly been a very interesting week. There's been a lot that's happened with the market, with Bitcoin, with crypto, um, Celsius. Of course, we're also in a bear market now. So there's definitely a lot of different things that I want to touch on today. So buckle yourselves in. We got a lot of great things that we can talk about here today. I do notice Jordan's here right away. So hello, Jordan. It is great to see you as well. Okay. Hopefully, most of you have made it through this week unscathed. I know that absolutely, there's been absolutely a mess going around when it comes to the market, when it comes to that whole mess with Celsius. That is just absolutely crazy what happened with Celsius. And we're going to talk, of course, about that as well. And hello, Riley, and hello, Mountain of Inspiration. Perfect. Awesome. Yeah, the thumbs up, the like button really, really helps the stream. So whenever you guys are throwing that my way, it certainly helps. Absolutely. And and then there's Bonnie. Hello, Bonnie. Holy cow, you guys are just jumping in really fast here. And we've got Riemann. I remember Riemann from last week, so it's always good to see everybody. Okay, so some of the topics we're going to talk about tonight. We're going to talk about the bear market. We're obviously going to talk about Celsius and what's happening with Bitcoin. I am going to bring up the Bitcoin chart later in the show, and we're just going to look and see where some resistances and where Bitcoin may or may not be going. So that's kind of a cool little thing. In addition to that, we're also going to talk a little bit about, our good old buddy Elon. Of course, what in the banana bread is going on with Elon? We've got another edition of that tonight. And we've got another little bit of whole bunch of little odd stories as well that we're going to bring in. So let's start with the big story. And I know some of you are thinking, oh, here comes Celsius, but Celsius is part of the big story, but it's all on its own side. The big story, of course, is the bear market. We are now officially, we're in a really bad bear market. We've got a situation here where we've got interest rates that are rising. We got prices increasing. Now we're officially in a bear market. And now for anybody who is fairly new to investing, this may be your first bear market, and it can be scary because you're looking at a sea of red when you look at the charts, and that's a scary thing to see, because one of the things that'll happen is you'll be like, oh my God, I got to start selling some stuff. I got to cut my losses. And that's just a great way to realize losses. So we're going to talk a little bit about that as well. Here's an interesting statistic for you. Since World War II, we've actually been in 14 bear markets. And you want to know how every single one of those bear markets ended? They ended with a recovery. So keep that in mind. So when you're thinking, oh my God, this is bad, remember on the other side, there's always a recovery. There's always a recovery, and it's going to be no different this time. We will recover. We will stand ourselves back up. We will wipe off the dirt, and we will start making money again. So that's kind of a good thing. Now, this week in particular, it was a bad week all the way around. So the TSX, the whole S&P TSX fell 6.6% this week. That's a single week. That's a huge, huge fall. In fact, one of the other interesting things about that as well is that the energy sector, which has been booming, I've been talking about it a lot. I've been making videos about it. Well, the energy sector this week fell 14%. So those of you who are high and heavy on energy stocks, your portfolios are crying. And I know mine certainly is. I will admit I am over diversified into energy. And, that was by choice. But here's a beautiful thing. I don't think that energy has finished singing yet. So I do think we're going to start to see a little bit more from energy before this is all said and done. But with that being said, I know I do plan, once energy recovers from this, I do plan to start moving some of my numbers a little bit back to where they should be. So get myself a little bit out of that over diversification part that I'm in right now. Now in the US, the S&P 500, it also had a horrible week, moving into official bear market territory. It was down 5.8% for the week. So that's pretty massive. And here's another interesting thing. 11 of the sectors of the S&P 500 were down more than 15%. So that's insane. Now, Jordan was asking, speaking of the energy sector, where do you see gas prices in 6 to 8 months? I don't see gas going down anytime soon. I think we may have temporary reliefs here and there along the way, but I foresee gas going up for a little while still. And it's interesting, even in the States, and Joe Biden came out and said to the gas companies, they said, hey, stop making all these record profits when people are suffering. Maybe refine more gas and, get more gas out there into the system. And that's kind of the message that Joe Biden said. Of course, now they struck back and said, look, we're doing everything we can. And it's not their fault that we're in this situation. Obviously, the big supplier of gas, came out of the whole Russia-Ukraine thing. That killed gas big time. And that's a shame. I mean, it's a real shame that happened. And I actually don't see any kind of a resolution in that anytime soon. I think Russia has settled in, and I think they're playing a long game with Ukraine. And I think they initially came in thinking that Ukraine would be a walkover, and they thought they would easily take what they were looking for, achieve their objectives. But Ukraine has turned out to be a lot tougher than they thought, and I think they've settled in for a long haul. Now, mind you, the fact that the world, especially the West, has come together and have been helping Ukraine by, providing them with some provisions, some, defensive weapons, things like that, that really, really helps. That helps Ukraine. But the problem is, from an economic standpoint, that just means that we're going to have shortages of oil. And even after it's over, some of these sanctions, they're not going to all just magically disappear on Russian oil. So that's one of those things to keep in mind. Now, Europe, as they are moving to get off of Russian oil, they're looking at other options. One of those other options is Canada. And Canada may very well profit, not that we're trying to profit on somebody else's misery, but economically, that could be a good thing. And I know there was talks of creating some kind of a port system, I think in Nova Scotia, and also one on the other coast, just solely for transporting oil to Europe and Asia, so that it could sort of relieve. And that, of course, would then be oil that we're selling. So that would certainly help the Canadian economy a little bit, which is kind of good. I see we got Lily in the house. And do you think we're going to be a $2 a liter regularly type of thing? Okay, so let's talk about the other side. I don't think we're ever going back to where we once were. So if you remember when gas used to be $1.25 to $1.40, I don't think we'll ever see that again. I think what they've done is they're conditioning us to think of gas as high. And when they do bring it back, when gas is no longer the scarcity that we have right now, I see them bringing it down to about $1.80, and I see people being very happy at $1.80. And then, when it's rough, it'll probably range between $1.80 all the way back up to $2. But I think that's probably what we're going to see. I don't think we're ever going to really, really go back. I know during early parts of the pandemic, you were able to get gas at under $1. I don't think you'll ever see that again, ever. So that's just one of those things to keep in mind. That's something that is definitely not going to happen. Now, Also, with all the stuff that's happening with a bear market, there's a lot of things that we need to sort of be thinking about as well as investors. One of them is, I know in this community, we have a lot of people who love their dividends. They love the high dividend stocks. They love all of that extra returns. Well, the only thing is, in a bear market, those stocks are the really risky ones. So if you're looking to get through a bear market, you want to start looking more blue chip. And there are some good blue chip stocks that provide half decent dividends. They're not going to give you your 15, 20% dividends. You're probably looking at 5 to 6% for some of the really, really high ones. A lot of them are in the 3 to 4. But your goal is, if you're a dividend investor, is you still want dividends coming in, but you also don't want to have stocks that are going to completely die on you. It's fantastic getting some high dividends, but then all of a sudden, if those stocks don't survive the bear market, or maybe they survive the bear market, but they just, as a way of surviving the bear market, they have to cut their dividends. Those are the things you want to sort of be wary of. So it's one of these interesting things when it comes to due diligence. And that's one of the things that I think in the community, myself and Ryan and the Danters and Ken are always saying, do your homework. Look at what you're investing before you invest. And in a bear market, that becomes 10 times more important than in a bull market. You take it in a good bull market, you can stand back and you can put a whole bunch of stocks on a dartboard and just throw a dart. And whichever one it hits is probably going to make you money. In a bear market, it's not quite that so. A lot of times you're looking at stocks they're going to just sort of trudge along. The overall trend seems to be downwards to a certain extent. I mean, you're going to have relief rallies. So you will come in, and this is an interesting thing. You'll come in and you'll have a green day. And it'll be like, oh, great. And you might even have a green week in the middle of a bull market where things start going back up. That can sometimes really break a new investor because they think, oh, thank God it's over. And then they're in that week and they're starting to get all caught up in the fear of missing out. And they're thinking, oh, everything's great again. Everything's working out. And then, of course, you're right back into the red the next week, right back into your bear market because it was just a relief rally. So those things will come along. They're important to sort of recognize them ahead of time and sort of know that you're going to see some of these relief rallies, and you just want to take any kind of green with a grain of salt. I mean, you'll know just from being in this community, you'll have a good idea when the bear market is over because we'll all, I'll tell you. Everybody else will tell you. The community will pretty much tell you. So you want to just be a little bit careful. And one of the fears I always have is that with a relief rally, if your hopes go back up again and then they get crushed back down, it can sometimes make it really easy to start realizing losses as you're like, oh no, there's no escape. I've got to sell. Now, are there exceptions to, like I always say, don't sell, because then you'll realize your loss. But I've also said you should be doing your due diligence. So if you're doing some fundamentals on a company and it's looking really bad for that company, then you may want to consider selling. But when I say looking bad, it's like, well, for example, if you're in one of these high div stocks that doesn't have a large market cap and things, and they've all of a sudden suspended their dividends, their fundamentals are starting to look a little bit bad, it really doesn't look good, and their price is just plummeting. That to me, I would personally get out of something like that. Hopefully I would catch it a lot sooner than the point where you're in that free fall with them. But that's one of those things that you do want to sort of pay attention to. So that's kind of, okay. And Jordan was mentioning as well, just with that war, I missed this one here, Jordan, that they're talking about a 2 to 5 year war. Yeah, it could very well be a 2 to 5 year war. I guess the only, I don't want to call this a silver lining to the war. But if it's going to take Russia 2 to 5 years to get through with that war, and hopefully they lose and they go back and everything goes back to the way it was, it just means that, it doesn't sound like there'll be a lot of room for an expansion of that theater, which would be good for all of us, because that's the last thing we want. If this war were to break beyond Russia, Ukraine, it would not be good for the markets. Also, it wouldn't be good, I think, for the world. So I would be a little bit hesitant about that. Holy banana bread. So the other thing too, when it comes to investing in a bear market, a lot of times people are like, well, how do I do it? Should I be waiting for that bottom? Because we need to figure out where that bottom of the bear market's going to be, and we'll buy all of our stuff then. Well, that's one way to do it, but it's usually not the best way to do it. The best way in a bear market, and this is the same as in a bull market, is your dollar cost average. So you want to be basically buying a little bit here, a little bit there. Maybe it keeps going lower. That's great. But here's the thing. On the other side of the bear market, after we've recovered, and even if, let's say it takes a year to recover, any of these dollar cost average buys that you've got, deep in the red, those are all going to look very good. And sometimes, like I said, if you bought and a year after recovery, if you're up 55%, it's not much difference than being up 54%. And I just use some big numbers just to sort of just illustrate it. You're probably not going to be up that much. Some bear markets, depending on how bad they are, it can sometimes take about a year once you're out of the market to recover everything that's been lost. But mind you, if you've been dollar cost averaging, you are lowering your base cost average quite a ways down. So it won't take you that long to get into profits if you've been investing while you're in the market itself, which is fantastic. Now, here's another little interesting thing too, in regards to the bear market, in regards to the overall economy. So they are, next Wednesday, they're actually, we're looking to raise rates up here in Canada, and then we're looking at a 0.75. There's no way that it's not going to be 0.75. So interest rates will be going up again, and that's on Wednesday. Now, we are also expecting CPI to come out soon, and CPI in Canada, most economists are calling for about a 7.3% inflation rate. Now, if that comes out, that will be the highest inflation we've seen since 1983, just to put that into perspective. But it may not be 100% as bad as you think it is, because they've now decided that they're going to weigh gas a little bit heavier in their CPI data. And they're also going to include used cars, which they haven't been doing before. So we're going to have a couple of extra little data points that may contribute to that raise. But nonetheless, it's still a bad number. And we're still looking at, here's the reality. We're looking at 75 basis points this time, and probably 75 next time. And you're probably in the US looking at the same, another 75, if not a full 100 basis points. So there's going to be a lot of that. And the problem, and here's the part of the danger, and this is part of what has happened with this bear market, is the fear of us, the fear that we're going into a recession because of raising these rates has been really, really impacting people. Like, for example, people liquidating things, moving things into cash, things like that all impact the market. And so there's been a lot of people realizing losses. And I can understand the fear. They're sort of in that situation. Well, if it's going to be a big, long recession, I don't want to watch all my investments go down to zero. I'm just going to pull everything out. And in some cases, they're doing it strategically. Some cases, they're pulling it out thinking, okay, well, if everything's going to go down another 5%, I'm going to pull out here and maybe buy back in down here. Once again, that's a timing the market thing. That can work, but it also often doesn't work. So you always want to be careful with things like that. And it looks like the friggin' Oracle just showed up. Hey, Ken, we missed you. So that's one of those things that you definitely want to be a little bit careful with. So that's the bear market in a nutshell. Now that does tie into the crypto implosion. So with crypto, it has been an absolute banana fuddling moment of misery for a lot of people. Bitcoin has plunged. even ETH was selling, I know yesterday when I was looking at ETH, it was selling less than 1,000 US per coin. So it's affecting everything. And the altcoins, well, I don't even want to touch the altcoins at this moment. It's like there's a lot of pain out there overall. And anybody who, of course, has been with Celsius, they've had a lot of extra pain. And I feel bad for anybody who has been involved with Celsius. Full disclosure, I I never liked Celsius right from the get-go. I don't know what it was. I think part of it is for me, they were too much like BlockFi. And I was with BlockFi for a while. And then when I wanted to move some Bitcoin, it was like, the fact that it took me 3 days to move my Bitcoin, I was like, no, this is unacceptable. I cannot have my Bitcoin tied up in some place where if I need to move it or if I want to utilize it to get another crypto or something like that, I just don't want to have to wait 3 days. So I moved out of BlockFi, and I know a few people in the community were saying, oh, you should come to Celsius. You should come to Celsius. I looked briefly at Celsius and I was just like, oh, they kind of give me the same vibes as BlockFi. I just couldn't trust them. So I avoided the Celsius mess. And now I'm very glad that I did. So we're in a situation, Bitcoin starts falling. Celsius all of a sudden decides to freeze all of their transactions. Now, the whole idea of freezing their transactions, it's not to sort of stop volatility or to protect their users. What it boils down to is they've started to freeze their transactions because they didn't have the liquidity to pay everybody if everybody starts pulling their crypto out of Celsius. They just don't have it. And so they froze everything to sort of prevent that complete collapse of Celsius, which is what I think we would have seen. Now, they also made a couple of little shady moves with FTX. I'm not going to get too much into that. But what is important right now is we're at a point that I don't think there's a winning way forward for Celsius right now. Because we're now at the point that this is what they're letting happen. People who've had loans with Celsius, those loans are, they're falling. Their collateral's being pulled. There's just a lot of people running into a lot of things. And it's not because they don't have the collaterals, because their collateral's frozen. Celsius has just absolutely proven to be untrustworthy. And at this point, if you have money on Celsius, I am so sorry, because I don't think you're ever going to see it again. I think it's gone. And there are people out there who have lost hundreds of thousands of dollars because of Celsius, and that is absolutely unacceptable. But here's where I think those of us who are not in Celsius and those of us who have moved forward from Celsius, in a bear market, I have always maintained the best place for your crypto is on a hardware wallet. And I will tell you that makes a lot of sense, because who would have thought that Celsius was going to be the ones to fall? There's a lot of exchanges out there I would have guessed before Celsius. So just keeping that in mind, it's one of those things. Now, over here in Canada, we've got, of course, our onboarding ShakePay. I don't think there's any danger with ShakePay falling. I don't think there's any danger with Wealthsimple falling. I have full confidence in both of them. I know Wealthsimple did lay some people off, but a lot of that is that Wealthsimple is pulling themselves back to their core, to their core business. They're doing what it is they're good at. They were spreading themselves a bit too thin, and that's kind of what's been happening with them. So I'm not even concerned about that. Now, with that being said, even though I feel safe on both Wealthsimple when it comes to crypto and ShakePay, if you don't have to gamble, even if it's a 99% chance you're going to be fine, why take that 1% if you don't have to? And that's where a hardware wallet comes in. So that's something to just think about. think about a hardware wallet. Think about how you want to protect your crypto, and think about how you don't want to have what happened to some people in this community. You don't want that to happen to you. And so that's kind of the way I look at everything that has been going on. And even Ken is saying that's why I've never put anything in place like Celsius. Yeah. Even a hot wallet is better than putting it on an exchange. So that's just one of those things. And, I know Ken has been talking about doing a crypto show. And I imagine if he does one of his crypto shows, I think they're going to be on Tuesdays and Thursdays. I don't know if you're doing it this week. Ken, let us know if you are, because I'm not going to promote it if you're not. But if Ken does do one of those shows, I would love to see him almost dedicate an entire one just to storage, just to how to keep your crypto safe. I think with what's been going on with Celsius, there's definitely a need for more education when it comes to that. And Ken just also added, Wealth and ShakePay don't lend out your coins. Exactly. And that's where a lot of these places do get in trouble, because a lot of them, if you guys are familiar with fractional reserve banking, a lot of them pretty much follow in that same footstep, but with crypto. So, you stake some crypto and you're getting some interest back. Well, that interest is coming from the fact that they've now loaned your crypto out, and somebody else might be staking a part of the money of the crypto they borrowed. And it all gets to the point that in the system, it looks like there's a lot more crypto than there really is. And that's because, they're just fractionally. So 100, let's say I'm just going to use it like if you had 100 Bitcoin, that 100 Bitcoin, the way it's broken up and loaned to different people, it might almost look like it's 10,000 Bitcoin. I mean, it can get pretty insane how much they can fractionally do this and sort of monkey the books that way. I mean, it is perfectly legal, but the danger is, and this is what happened, is liquidity. If enough people come back and decide, okay, I'm pulling my crypto out, and they don't have it because they've loaned everything to everybody and their dog, and they haven't kept enough liquidity for those transactions, then they start getting in trouble. And that is exactly what has happened to Celsius. And I've heard people warn. I've heard a lot of YouTubers warn about that type of thing exactly. And it's fascinating watching it happen, but it's not something I like to see, because once again, people in this community were hurt, and that's unacceptable in my mind. Ken is mentioning, funny how the Luna thing happened, then the market crashed. It's odd. It's odd the way those two sort of got strung together. So is there a connection? I don't know. I'm not going to put on a tinfoil hat, but it is one of those things that makes you go, And Gen X says, I had some Bitcoin on Celsius a year ago. Thankfully, took it out as the yield wasn't worth the risk. Awesome. I like to hear that. Now, Gen X knows what he's doing. So that does not surprise me that he got that out, which is fantastic. Hopefully, Gen X, you're keeping it on a hardware wallet now, or at the very least, someplace safer than a lot of the exchanges. So I did want to quickly, we might as well do this now. I wanted to quickly take a look at Bitcoin. And give me a second here. I'm just going to bring up my Bitcoin, and we'll put me down here. All right, so this is our big Bitcoin chart. And take a look here. Now, this is the big drop that we've just had, which is kind of weird. Now, one of the things I want to point out right away is when we come down here, you look that we've got Bitcoin on the way back up today. And people who invest in Bitcoin can sometimes be a little bit of that type that as soon as they see green, it's like, oh my God, yes, finally we're going back to the moon. Maybe not in this case. And I'll tell you why. When Bitcoin does, it trades 24/7. So it's always trading. But there's this thing called, and you probably have heard of a CME gap. So CME is the Chicago Mercantile Exchange. And so when they closed this on the Friday, Bitcoin was sitting just above 20,000. And then, of course, Bitcoin falls. So when the CME opens on Monday, wherever Bitcoin is, and actually I think they even have an after hours that they open on Sunday night, but wherever Bitcoin is at that point in time, if it's lower than where they closed, it creates a gap on the charts. And a lot of times what will happen is Bitcoin will move back up to close that gap. So this is interesting. This may be Bitcoin moving back up just to close that gap. So it's one of these things where I don't know what's going to happen with it, but maybe we could get some movement. But I think right now the whole sentiment in the market, there's not a lot of money moving in. I don't think that's going to happen. So let's talk a little bit about, I just want to talk a little bit about what can potentially happen with Bitcoin. So I want to show you, first of all, I want to show you some lines. So we have to zoom way, way out. So you'll see this line here that I've been using here as a line of resistance. You'll see that it's not just in this little area. This is how I've gotten this line. The fact that we've come down into this zone of resistance many times. So you can see it here, you can see it here. Also, you can see it over here. So that's what's created this line of resistance. We know from history that Bitcoin has found support and resistance in this zone. And that's one of the reasons why, if they've found it before, we know that it's still there. So it's kind of an interesting thing. Now, this here is another line of resistance, the one that we're currently in. And here's the interesting thing. We actually came right down and hit the bottom of that. We wicked to the very bottom of that zone before we came back up. But I think we're just filling this gap. So what will happen is if we break below this line, and what we're looking at on this line is the bottom of the line of our resistance zone is around 17,800, or sorry, 17,500, roughly in that area. If we break below that, well, if we come back over here, you can see it's almost a straight track down, but we did have a little bit, I'm going to zoom over here and show it. Eek. So we did have a little bit of resistance in here. As you can see, we went a bit sideways. So that is a potential line that we could run into some support if we start falling. I'll bring this over here. So if we start falling, we may fall down to 1,600 and find some support. Now, it's not a strong support, because it's very weak over there, the amount of sideways movement we had on it. So I don't think it's going to be something that's really big. So I think we'll actually push through it if we do fall. Now, we've got nothing between these two blue lines when it really comes to support. There's nothing significant at all. So if we break below this, I think we're going all the way down to this other line, which is at 11,700. So roughly between that and 1,200. And once again, if I just pull this over, you can sort of see we've got support coming in through here. It's been used. It's also been used around the top of over here. It almost made it here, but that I think would be our next area of support. And I don't think we're going to go below that. That's my personal opinion, my feelings from looking at the charts. So keep in mind, like, this is not technically, I mean, this is sort of the basics of TA, but right now, honestly, nobody knows where Bitcoin is going to go. Bitcoin is kind of doing its own thing. A lot of it is that it's been following the market. As the market has crashed, Bitcoin has crashed big time. So this may not, all of this movement may not even be attributed to Bitcoin itself. A lot of it may be contributed to the market. So that's kind of one of those things that's kind of interesting. Okay, and Gen X mentioned my Exodus wallet currently, but Ledger is on the way. Perfect. Yeah, I use Ledger myself, so that's I do like that one. And then the friggin' Oracle said, if miners start selling to break even, then it's going to drop even more. Yeah, that's one of those big things, is what happens with the miners. And it really depends on the miners too. I mean, if I were a miner now, I would just be stacking sats, because You know, Bitcoin will recover. Bitcoin has a utility. This is not going to be a forever thing. It may not recover for a year. We don't know. Nobody knows, but it will recover eventually. So it's one of these things. When should you buy? Should you wait for this? Should you wait for it to get down to 1100? Nobody knows. That's the whole thing. And that's why DCAing is very important and why you can make a lot of money by DCAing. And when I say DCAing, that's dollar cost average. So buy a little bit now, a little bit more. And because here's the reality, eventually when Bitcoin is seeing new highs. Now, I want to put another little thing in here as well. A lot of money has left the market. And by raising rates, by raising interest rates, by selling off their balance sheet, what we're doing, what the Fed is doing and the Bank of Canada is doing and all of the major governments, all of their monetary units is doing is they're shrinking the amount of money supply in the world. So by shrinking that money supply in the world, it means that it's not going to be as easy as you think to get back to all-time highs. Not without one big thing, and that is institutional investment. And for institutional investment to happen in the US, that's where all the money is, so let's just put that on the table, there needs to be a little bit of regulation. And I know there's probably a couple of Bitcoiners out there who their shackles have just come up on their backs and they're ready to shoot spikes at me for saying that. But it's true. I don't think we need severe legislation. I think we need just enough legislation that institutional investors are like, okay, this is a legit thing. This is not a speculation. We can use this. We've got enough regulation that, we can put it on our balance sheets. And that's what they need. Once we have that, then we've got that money coming in, because if all of the big institutions in the US say, oh, okay, yeah, let's put 5% on our balance sheet, that would be a lot of money coming into Bitcoin. So that's something to keep in mind when we're thinking about the future of Bitcoin. Right now, until we get that institutional investment, it's going to be rough to get all the way back up to your 60Ks, or if you ever, if you're one of these people who's like, yeah, we're going to go to 100K, not without institutional investment, you're not. So I'm just putting that out there. Yeah. All right. So that's Bitcoin. I'm just going to remove that, bring myself back up big screen. And we of course have one of our favorite topics here, which of course is our Elon topic. So what in the world, what in the banana bread is going on with Elon? So we actually do have news on Elon. And before we get to that, I'm calling 50K UDS for Bitcoin this year. Okay. I could see it getting up to 50K without institutional investment, but I don't see it getting to an all-time high. Now, here's the interesting thing. Since we've fallen back into this topic, the interesting thing is there is a bipartisan movement to get some regulation in place for Bitcoin. That would be a game changer. Obviously, it takes a while to get bills pushed through the U.S., through any politics, really. So that would be interesting to see if that comes about. The SEC could help that start to become a reality if they were to just approve a spot Bitcoin ETF in the U.S. I think they're going to be very hesitant to do it. There are issues. I don't want to say there's issues with doing it, but I think without regulation, I just don't see them wanting to do it. I see they kind of are still in that mindset that it's just too dangerous. And, I don't subscribe to that, but that's the mindset that they have. And I think as long as they're sort of viewing it that way, but keep in mind, this is changing. The attitude towards people have been changing quite a bit. And Cisco mentioned that Ethereum will hit 900 Canadian. And people are saying Bitcoin 23K Canadian this year. Yeah. Yeah. I mean, there is a good possibility. I mean, if we're in this bear market, it's going to be. Now, I know that the friggin' Oracle is saying it's going to go higher. And I never bet against the friggin' Oracle just because he has somehow able to pull things right out of his butt. Pretty simple, easy. Yes, but you can trade outside the US if you don't like their regulations. This is the issue. It is, and it's not even so much about trading outside of the US. It's just about all of the big money that is sitting in the US waiting to go into Bitcoin, but not going into Bitcoin because of the lack of regulation. So it's kind of a slightly different thing. I mean, there's still, I think, a lot of movement. I think we can still see a lot of growth outside of the US, but trying to make up that giant surplus of money that has now evaporated from the market, that is going to be what's going to be the big hindering block, I think, with Bitcoin. With Bitcoin, I almost called it Blitcoin. There probably is a Blitcoin. So what in the banana bread's going on with Elon Musk? So Elon Musk and Jeff Bezos came out this week, and the two of them have said they know the cause of inflation, and they have blamed governments and all of the money printing. They're basically saying that it has to do with all of the supports. And that's what got everybody in trouble. And that all of that's just catching up to us now and causing all of this inflation. I definitely think that plays a part. I think the supply chain, though, is also another issue as well. I think you got to look at it from 2 points. But that was interesting that Elon came out with that. Now, that's not all that happened with Elon this week. So SpaceX has fired some employees for publishing open letters criticizing Elon Musk's behavior. So that's kind of interesting. I think, I don't know. It's one of those things where it's like, I do believe in the freedom of speech. It just depends on how they did these open letters, and was it a violation of company policy? So that might be one of those interesting things. Now, in addition to all of that, Elon's been hit with 2 lawsuits this week. And that's what's really interesting. So one of them has claimed that there's a toxic work environment at Tesla. The other lawsuit, and I found this one actually I chuckled when I heard it the first time. Apparently, they are saying that Elon promoted a Dogecoin pyramid scheme. So I don't know a lot more about those two, but I think that's going to be really interesting to see what is going on with that. Yes, the human malware event really put a wrinkle into it. The pandemic certainly did. And I've noticed this now. For those of you who do stream, I've started saying pandemic again because they no longer are. Initially, at the early part of the pandemic, if you even said the word pandemic or COVID, the algorithm would pick up on it and then put those little COVID information things at the bottom of your video, just so people could get correct information because of misinformation that was flowing like crazy. So I think now it isn't happening anymore. So I feel very comfortable just saying COVID or pandemic or anything of that nature. So anyway, just an interesting thing. Cisco says, your opinion, what would be the best opportunity right now to make the most money? That's a really, really good question. It depends on if you're asking. There's 2 different answers to that question. One is if you're looking to make money now. 2 is if you're looking to make money later. If you're looking to make money right now, everything is falling. Interest rates are flying up. So there's a couple of things that you can do. There are inverse ETFs. They move in the opposite direction of the market. So they rise as the market falls. Some of them excuse me, some of them have leverage on them, so you're actually making some half decent money on them. However, and I'm going to throw this out there, they are highly risky because where a lot of them will have like 2 times leverage, if the market flips on you and all of a sudden starts going back up, you're losing twice as fast as you would from any other method. But right now, at this very moment, that is definitely one way. My second, I guess the other thing for right now is I'm still feeling strong on the oil sector. I know we fell about 12% this week. That was devastating. I'm highly diversified in oil, so I certainly felt that. But that's going to rebound, I think, quicker because this demand for oil is not going away. Bear market or not, I think that's still going to be a strong sector. However, if you're looking at long term, well, there's a lot of different companies out there that you can invest in that are currently in the red. So you're getting some pretty good discounts on them and they're going to rebound back. The big thing, though, is you want to do your fundamentals on these companies. You want to make sure, first of all, if they're blue chip, the closer or at least close to blue chip, that is fantastic. You want to make sure that they are doing well. So for an example right now, one of my favorite stocks, and this is not financial advice, I'm just telling you this because this is one of my favorite stocks. One of my favorite stocks is Canadian National Railway. What I love about them is they're pretty much recession proof in my opinion, simply because they're such an essential service. They are part of our backbone when it comes to the supply chain. They're also part of our backbone when it comes to removing, getting minerals from the mines up north. So they have a lot of function that doesn't stop in a recession. And just to give you an example, right now, when the market is down an insane amount, so a lot of my stocks right now in my portfolio are down, 9 to 12%. I've got one stock that's down 36%, but that's something different. My CNR stocks are only down they're not even down 3%. So they do tend to be pretty resilient. Now, another thing with that is I know that we've been talking, I know me and Ryan last week were talking about bonds. Bonds are normally a good place to park your money in a recession, except for now. And the reason for that is because we've got the whole interest rates going up. When you raise the interest rates, the price of bonds go down, so you're losing money. So that's one of the reasons that there is an inverse bond ETF. I did a video on that. You can check that out if you're interested. Once again, that stuff's all highly risky. And if you're a long-term investor, if you don't mind waiting to make some money, the biggest opportunities are going to be in pretty much everything that is blue chip that's sitting in the red, that you're going to have a good opportunity to buy, to DCA into them at a premium, not a premium, but at a premium discount. So that to me is definitely a good thing. All right, now Ken said, since alt runs on ETH and BNB, these two might be the best investments while it's low, but must catch the bottom or DCA. Yeah, I was looking, getting ETH under 1,000 is not bad. And we're talking, whenever I talk prices on crypto, I'm always talking the USD just because it's kind of like we all need a common metric, and that's what everybody sort of talks and quotes about them on. For short term, you should check out Candace's video on bond ETFs. Yeah, absolutely. But once again, anytime you're going with an inverse, they are risky. You want to be, if you're brand new to investing, don't touch them. Don't go near them. Trust me. Get about a year under your belt. Understand the market more before you start playing with some of the more riskier things. Now's the time for investing into blue and dividend stocks. Yeah, absolutely. That's the big thing. your big dividend stocks. Another stock I love too is Fortis. They're really close to becoming a dividend king. So there's a lot of different companies out there, I think, that are really blue chip, that are fantastic. The big six banks, they're not going anywhere. They're good. The big three telecommunication companies, they're fine. And I did want to get to the question Jordan had. So what about, will the strike affect the CN stock, you think? It might short term, but they tend to bounce back pretty fast. I mean, there's a lot of things that have short-term effect on the CNR stock. A major derailment can have an impact on the stock, especially if it's like hits the news big time, like with a chemical spill, that type of thing. So there are a lot of things that can definitely affect it, but they bounce back quickly. You got to look at this. The CNR have been through so many recessions, and they've rallied through them all. So that's one of the reasons I definitely love them. Cisco likes Costco and Loblaws. It's because I haven't had a drink. I need a drink. Yeah, I mean, your big grocery stores, they're pretty safe. It's not like people are going to all of a sudden stop eating because it's a recession. The biggest issue that places like Costco, Loblaws, Walmart, the places that they're going to have issues with is mostly going to be supply chain. One of the interesting things, now this is very interesting. We're in a situation where a lot of the stock that they have not been able to have because of the supply chain issue, a lot of them are slowly sorting their way through the supply chain, and they're getting all the stock, while at the same time, people are spending less because they're afraid of the recession. So keep in mind that means there are going to be a lot of products on sale. And this also will filter to Amazon because I think they're in the same boat too. So keep your eyes open. If you're looking for something, physical item that you do need, definitely hit the internet, check the prices at some of these different locations, because you might be able to find some deals that you're just not expecting to get, which is definitely be cool. Gen X, I love this saying. So in the words of Warren Buffett, be fearful when others are greedy and greedy when others are fearful. There's a lot of fear out there right now, folks. A ton of fear. And hello, Verena. It's always good to see you. Wrong type of drink. Holy banana bread. You got to wait till I get to 1,000 subs and I'll have that alcohol stream just for you, Ken. So, well, no, it's just we're gonna celebrate. And the reason I'm willing to do it is because I normally, I don't drink, but when I used to drink, I'm that type of person that when I drink, I get insanely silly. So when we have a live stream to celebrate 1,000 subs, when we get there, so any of you here who are not subbed yet, you better go do that right now to get us one step closer. It will be fun to watch. I will probably make laughing sounds that you have never heard before in your entire life. Sometimes my laughing has been compared to seagulls mating. So just take that and think about whatever that might mean, and you'll find out when I hit that 1,000 subs and I do that stream. So that is kind of cool. Sunday Martini, yo. Oh, Ken, that's funny. I want to buy a new Prius. Have to wait almost 1 year. Yeah, absolutely. And then another thing with Tesla, and I didn't bring this up in the Elon thing, all the prices of Teslas right across the board are going up for the simple reason that all of the parts and the components that they have to buy are going up. So we knew that would get pushed on to the customers, of course. And yeah, trust me, it is funny, Ken. You will enjoy it. Absolutely. All right. Couple small little stories I just want to squeeze in here. So WestJet is going to become more West. So WestJet has announced that they are going to increase their operations in the West. So they're going to have more flights in the West, while they're going to start to scale them back a little bit in the East. And they'll have less flights in the East. Their reasoning for this is WestJet says there's just a lot more growth potential for them in the West. So they're doing what they do best, and they're going to be more of a Western airline. They'll still have flights in the East, but the priority is going to be the West. So that's kind of interesting. Here is another interesting thing. We all know that the word is coming out, the housing prices are starting to fall a little, which is fantastic. But here's the part that doesn't make sense at first until you think about it. So rents are actually going up though. So why is that? Well, the reason for that is because of these interest rate hikes. So as the interest rates go up, people are paying more, like landlords are paying more on their mortgages, and they're not going to be paying more on their mortgages. They're passing on those extra costs to the tenants. Hence, that's one of the reasons that you're seeing a lot of rents start to go up. So that's going to be one of those interesting things. Cisco says, "Oh yeah, we have flare cheaper flights." Yeah, definitely. Now here's an interesting question: how many of you guys have actually flown since the pandemic started? I mean, I have. I flew from Halifax to Ottawa when I moved here because it was too far to backpack. That's for sure. So just out of a curiosity. Now, one other little tiny story I want to squeeze in is Rogers and Shaw. Now, I know we talked a little bit about this. I think quite a while ago, I talked about the fact that there was going to be an issue with them merging with the competition board, and that turned out to be exactly what happened. Well, Rogers is now proposing that they are going to sell the Freedom Mobile, which is owned by Shaw. So they want to sell Freedom to Quebecor, which is it's a Quebec-based phone company. And what this would do, and this is what Quebecor says, is they're saying, well, because Freedom is national, this would make us national. So we would now be that fourth national carrier if this goes through. Now, I have heard rumblings that the competition board is still not happy, but we'll have to see. If this deal does go through, basically Quebecor would be paying $2.85 billion for Rogers. So that'll be kind of cool to see. All right. So we're coming into the end here. So throw in your questions really quick. Now, while you're throwing up some questions for me, I'm going to just let you guys know what's going on the rest of this week. So tomorrow's video is going to be something a little different. I know people are always curious about, well, what's in your portfolio? Sort of reminds me of the Capital One commercials. What's in your wallet? So what I'm going to do tomorrow is I'm not going to open up my TFSA and show you exactly what's there, but I am doing a video just to break down my top 10 holdings for you. Let you know, we're not going to go into too great detail on each of the companies, but I'm going to let you know, first of all, I'll let you know what percentage of my TFSA they take. I'm going to let you know how badly they've fallen right now, because where everything's in the red, it's kind of funny just looking at some of these numbers. And in addition to that, I'm going to give you a quick little pro and a quick little con. So a pro and con on each of these as I see them, and that will give you a little bit of an idea of what's in my portfolio. I think my top 10 make up, I think it's 59.6%, somewhere's in that area. It's less than 60%, but it's close to 60% of my TFSA. So that will be, that's coming up tomorrow. I've actually, before this, I've been editing it. I've got most of it edited, so I got a bit more to edit tonight. Though after this stream, I'm actually going to have some steak. So for those of you who love steak, you can be jealous. Actually, I'm cooking it, so you may not want to be jealous. So it may involve a call to poison control. That's yet to be determined. Because I'm not the best. I'm not the best at cooking. I'm very good at eating, but I'm not great at cooking things that are complicated. But I do make a very, very wicked peanut butter sandwich. That I'm proud of that. And Ken found that a little bit funny. Yeah, it's like, I'm just one of those people that I love simple. I love things to be very, very simple. So that's what's coming up. Oh, and Thursday's video. So everything's back to normal this week. So I know last week I did that special thing with Ryan, so it kind of threw my videos out. And then I threw the bonus video in just to try to even things out. Everything's back to normal. So the Thursday video, somebody had asked me, I think 2 weeks ago, if I could do a deep dive on PPL, on Pembina Pipeline. So that will be coming up on Thursday, and then of course we'll be back here again next Sunday for another one of these to see what's going on. And the way the things have been going, I imagine there's going to be a lot going on. So, and what's this? 6 minutes each side on the Barbie. Oh, the barbecue. All right, I get that. Now, when I first saw that, I thought you were talking about a Barbie doll. I was like, what? What's he talking about? So anyway, yeah, we actually, we don't have like a propane barbecue. We just got like apparently we've got one down here in the storage room. I have to find it and put it together. I think it uses like the charcoal coals, but I'm not 100% sure. I haven't actually seen it. But that's okay, because I mean I don't see us barbecuing a lot, but we do a lot of air cooker stuff, and that I it's really funny. Like, I never was an air cooker fan until I started tasting the stuff coming out of the air cooker. Now I kind of really like it. So that's kind of one of the things. Hibachi. I assume that's a brand of barbecue. Yeah, there we go. So that would be definitely a good thing to do. I'd love to have a barbecue. I'd love to get that set up, and not enough time to do it tonight because, like I said, I still have a little bit of editing to do for tomorrow. So, oh really? I think these steaks, though, and I'm not saying this to brag, but I think these steaks might be too big for the air fryer. But maybe they're not. I would love to try. I've never tried steak in the air fryer, so maybe we'll have to take a look and see if we can fit those in the air fryer, because otherwise I'm going to have to do some kind of a searing thing on both sides and then put them in the oven so I can cook the middle. And yeah, the air fryer would probably just be so much easier. So anyway, look at this. So you guys have got me rambling past the 1 hour mark. That's the object, right? If you guys keep asking me questions, I am capable of rambling forever, because I can talk. Sometimes if I really, really get going and you put a little windmill in front of me and hook some wires up to it, you could power a light bulb. It's true. But, and of course, somebody's bragging. Somebody's bragging. But my stomach will appreciate that. My taste buds more than my stomach. So steak is definitely good. All right. Oh, and last night we had salmon. That was actually rather good too. It was because, well, we're having a really good meal last night and tonight because her cat's birthday was yesterday. So we had to celebrate the cat's birthday. And since the cat can't eat any special food, the humans get it instead. So that makes sense. So no barbecue sauce, just butter, salt, pepper, done. There we go. Fantastic. All right, everybody. Thank you guys all for being here today. It's been another fantastic afternoon. Hopefully next week, it won't be all doom and gloom. We'll have some better news up there. But here's the thing. If it's all doom and gloom, you guys have the power to just throw me off on a tangent and we'll talk about whatever. That's what the chat part of this is all about. So anyway, until next week, you guys have a fantastic week. I'll see you in my videos, and I'll see you guys around the community. Everybody, take care, and we'll see you again.